Hi, good evening. Thank you for being punctual. My name is Shermaine, your presenter for tonight's second quarter market outlook for 2021. So we are expecting a large crowd. So let's just start the session proper, give them about 2 to 3 minutes, okay? So meanwhile, just grab a notebook, a pen, some coffee if you need, and get ready for the training later lah. So as you can see on the screen here, there are some QR codes. You can take this time to register for the free demo account available here. Tonight in topic, I will be using MT5 platform, the charts and the functions and even the technical tools. So I do encourage that you download the MT5 demo account to familiarize yourself with the functions. So I speak to you again in about 7:03. Thanks. Okay, so let's start. So good evening once again. Thank you for finding time to attend tonight's webinar on the second quarter market outlook 2021. So this is Shermaine Tan speaking, your presenter for tonight. So I will assume that the audience tonight will have some form of investment or will looking to add indices or gold to your investment portfolio. Now, I will try my best to cover as much as I can to assist you in understanding this kind of ever-changing market condition. However, webinars like this can only assist you that far. I will still strongly suggest that you will have to engage a broker to help you keep track on your investment portfolio. So some administrative here is that during the webinar, if you have any questions, do type them in the question box and I will address them when we have our breaks. Okay, so before we begin, let me just do a sound check. So if you can hear me well, just please type yes into the question box. All right, yes, thanks, Ellen. Okay, so let's begin tonight's webinar. Okay, so for the benefit of those who are listening to me for the first time, right, do let me do a brief introduction of myself. So I'm a licensed representative with MAS and have been in the industry for more than a decade lah. So during this time, I have seen, experienced many types of market movement and how trading has dramatically shifted until now. So when new investors like you or traders, when they come to me, I will assess their investment portfolio as well as to understand their risk appetite and recommend the right trading strategies that match their lifestyle. So hold on. Okay. So just give me a second here. Okay, so let me just do a brief introduction for myself lah. Okay, so when new investors or new traders they come to me, I will assess their investment portfolio as well as to study their risk appetite and recommend their trading strategies to match their lifestyle. So and the next thing is that I have what I do for my customers is that I will have twice a month live Zoom coaching sessions with my investors where we will come together, we will meet and discuss about the current market situation, which market to be focusing currently. So these Q&A sessions are for investors under my care where they might feel stuck or not sure how to look at the markets a few months down the road. So far these type of sessions have been proved to be beneficial in aiding their trading decisions. Okay, so let's get on to our topic in focus. Of course, everything we always want to start off with the fundamentals. So let's look at the US unemployment rate. The US unemployment rate fell 6% in March 2021 from 6.2% in the previous month, the lowest rate in the year and in line with market expectations. So the rate has been falling steadily in the recent months after reaching an all-time high of 14.8% in April last year. All right, next we look at US GDP. All right, now US economy expanded an annual about 4.3% on quarter in the last quarter in 2020, higher than 4.1% in the second estimate. Now, this is mainly due to upward revision to private inventory investments that were partly offset by the downward revision of the non-residential fixed investments. Of course, in a nutshell, it means that the expansion was slower compared to the record 33.4% growth in the third quarter. Okay, but however, it continued to rise, especially the COVID-19 cases and the restriction on the activity moderated consumer spending. Now, considering full 2020, the GDP strength, they strength 3.5%, the most since 1946. As you can see, it has been hit very, very badly by the COVID. So the outlook for 2021 seems brighter than a few months ago. And of course, vaccination campaign continues. And the 1.3 trillion aid bill was approved, and the Americans has already been receiving the stimulus checks already. Now, with that said, let's recap on Biden's policy that has been taking place. Okay, after signing more than 50 executive actions. Now, most notably on is coronavirus, jobs, and money. So we know that, of course, for the COVID-19, his target is to provide free testing for all, hire additional people to set up national contact tracing program. All right, and of course, he is trying to push all governors to mandate wearing masks. So now it's still optional in that sense. Okay, now for on jobs and money, 300 billion increase in government spending. Where will this money flow to? On research and development for technologies. Many months ago, I've talked about he's targeting green technologies. So yeah, like electric vehicles and of course 5G cellular networks. Okay, and of course he's going to pump in additional 400 billion in federal procurement spending on products that are manufactured in US. So to kind of bring up the whole made in USA economy. okay, rather than relying on the imports. Okay, now markets have been reacting to the stimulus check in place. So let us just take a look at how these markets are doing currently. Okay, so now for Nasdaq, of course, Nasdaq is continuing to grind higher, and of course, balancing above short-term tentative upside support line taken from the low of March 31st. Now, as mentioned above, the index may drift a little bit lower for the weeks to come, but buyers should take advantage of the lower price to ride on the uptrend. Our view is it will continue to break the previous high. So if, of course, Nasdaq is able to overcome the current highest point in April, which is 13905, this will confirm the forthcoming higher high and send the index above the previous high. How high it will go, I won't know, because it's, of course, breaking records lah. All right. Next, we are looking at US indices equity. All right, we start off with the S&P 500. As you can see, it's also like breaking record highs. And we have the Dow Jones, also same thing. They move together in tandem. So they hit fresh record highs. As why is because of the US economic data. They continue to come out strong. We talk about non-farm payroll. They surged by 900K of increase in payroll. The ISM non-manufacturing PMI also hit all-time high. So in our view, the rally in the US stocks may have been the result of strong US economic data. So let me just recap. Non-farm payrolls for March surged about 900K, while the unemployment rate slid to 6% from 6.2. So of course, the data are showing very, very good. And ISM non-manufacturing PMI, they surged from 63.7 from 55.3. Very, very good. And it's also the highest level ever. So this will highlight that the world's largest economy is recovering from the damages of the COVID-19 pandemic at a very, very fast pace. Now, with all this, right, in my own opinion, is that there's a lot of reasons to be excited about the months ahead. I'm generally optimistic for this year. Market momentum is strong, no doubt about it, all right? Now, the market may be ready to take a breather, all right? Slight correction, slight retracement as the investors are digesting all the good news, okay? To determine how much of that is priced in and weigh it against uncertain risks such as inflation. We all need to bear in mind because of the pumping of the money into the economy. So the US Federal Reserve, they also need to keep a cap on whether it's going to be hyperinflation or not. All right, now for the US jobs opening report for February, job vacancies rose to 2-year high of 7.3 million added. And the hiring is also recorded its biggest gain in 9 months. So with that, the International Monetary Fund, right, IMF, they also forecast that global growth could reach to about 6% in 2021 at yeah, correct. So this figure is actually the strongest expansion for at least 4 decades, okay, 40 years. All right, so this is thanks to unprecedented public spending. Now, primarily by the US, right? We're talking about the 1.9 trillion, and there will be some more on the cuts, all right, to combat COVID-19. Now, on the COVID-19 front, US President Joe Biden, he moved up the COVID-19 vaccine eligibility target for all American adults to 19 April. Now, this move will further widen the vaccine rollout. So we will see that more people will get the vaccine sooner than expected. All right. Okay, so next, let's look at spot gold. I know that everyone will be waiting and you all want to find out what is going on for gold. Now, thanks to the recent weakness in bond yields and of course US dollar, gold have been able to put up a decent fight in the last month. Also, as the prices tested some of the key long-term technical levels. While the technical backdrop has improved a little bit, now from a macro point of view, the risks still remain tilted to the downside, okay, for near-term outlook for gold prices. All right, so later I'll touch a little bit more on the technicals, but gold will continue its downward trend, all right, the bearish trend, and they started since the middle of last year. So the recent slight recovery is again just a slight correction, a slight retracement. All right, so we will find out more when the prices test some of the key resistance levels. Okay, so in micro point of view is that gold has already tested the key hurdle about 1755, 1765 range, and this area was previously supported but now turned into resistance lah. So it remains to see whether more losses will follow as the price tests other short-term support. Okay, so right now, so far, any questions? Just continue to flow your questions into the question box. All right, okay. If there are no questions, I will just follow on, all right, because I have so much to share tonight. All right, so moving along, these are just fundamentals, okay? Let me just briefly go through the contract specification. Say, because I've been saying like on Nasdaq, S&P, Dow Jones, they are continue to on their uptrend, and of course gold will continue their downtrend. Now, what you need to know when you first start trading, all right? So let's look at this. In a nutshell, this is what you need to know. Take a photo if you need, all right? Now, when you trade, say for example, CFD Nasdaq contract, the contract size is USD $1 times index price, okay? Now, so which means that if you times the index price is about say 12,500, so the full contract size is going to be USD 12,500. But of course, you don't pay the full contract size to us, all right? We only require 10% of the contract value, and this is what we call margin required, all right? So 10% will be about 1,250. Okay, so as you can see here, moving along, trading hours are stipulated here. Okay, dollar value of 1 point over here is your profit and loss. Okay, so which means that every 1 point, full 1 point movement is USD $1 profit or loss in your account. It's quite straightforward. Okay, now CFD indices like your Nasdaq, S&P, and Dow Jones, and your spot gold is offered on MT5, and this is all zero commission. All right. So and the margin required over here, as I want to elaborate a little bit because I have a lot of questions about what is margins. So CFD spot gold, these are leverage products, meaning that you just need to put up a deposit of 10% of the full contract value into your trading account before you start trading one contract. The deposit is known as margins, as you can see here, and this will be locked up by the system when you start trading. So for the example over here, to trade one CFD Nasdaq, you take 10% of contract value, which is USD 1250, and of course the example for gold margins is 20%. Okay, so that will be about USD 356. Okay, now like all other leverage products. Once you close off your position, your deposit will be released back into your account. So this is in a nutshell how it works. So now you know how it works, right? Okay, let me just briefly talk about how to gather your research to help you trade these type of market, especially they are faster moving markets as compared to stocks. Okay, now, all right. So fundamental analysis, technical analysis is very important, especially when you are trading such markets. We are mainly looking at US markets. So we need to have some fundamentals. So the background research you need to gather when forming your fundamental analysis is, of course, you need to know your news. What are the breaking news for the day? Which basket is moving? Equity indices, commodities, or currencies? Now, the key drivers for market performance, you need to check on the news pertaining to the key pressing issues currently. So what is on everybody's mind currently? What are we facing, right? Still, we are not out of COVID-19, even though there's better developments already. So you still need to look out for news on whether, there is more development on vaccines, or is there any new geopolitical tensions, especially US, China. Okay, so say for example, when government they inject stimulus into the economy, right? So stock market will keep going up, right? Because cheap money in the market. So you might be wondering that for gold market should continue to move higher, right? Because of USD weakness. That is true, but however, like I mentioned to you, your key pressing issues, the key drivers for market performance is not so much about the weak USD, but also the positive vaccine development, the good news, the good economic data that US just came out with. These drivers far outweigh the need for safe haven. All right, so that's why we see that the gold prices continue to weaken further. Okay, so next is, of course, we need to also understand which markets are reporting big movement, and then you focus on the news that why such movement are happening. All right, so also the next thing is, of course, the economic data and your on the product that you are trading. Okay, so now for tonight's discussion, the key economic data for trading US products is jobs data. Okay, so we talk about non-farm payroll, we talk about US jobless claim. So that's why you see I cover on US unemployment and GDP. Okay, so another piece of research that you have to add to your fundamental analysis is central banks meeting and also their minutes. Whether did they change their tone or did they put in more elaboration as compared to the meetings that they had. All right, so you need to be familiarized with what the chairman of Federal Reserve is talking about, and also his outlook for the months ahead to find hints whether to cut rates or not, as we recently have been looking out for, but so far cutting rates is not on the cards yet. Okay, and it's also good to pay attention to the European Central Bank meetings. All right, you talk about the ECB, Bank of England, Bank of Japan, because they are major alliance with US. So if let's say ECB, they want to maybe they want to cut rates, then you see that either the rest of the central banks, they will consider that or they will follow suit. Okay. Okay, let's see. All right, so let me just go through a little bit of questions over here. Okay, continue to flow in your questions lah. Okay, year forecast for gold is that it will continue to be, we are very optimistic, so it will continue to weaken, like I mentioned to you, which I will cover in the next portion for tonight, is that it will continue to be bearish. All right, but of course there will be slight correction, slight retracement, okay, for the investors, the bearish investors, to take a breather. Okay, and all these things I will cover up in the next second portion of this seminar. All right. Okay, what else? Let me just go through the questions here. Is this webinar purely CFD based? Okay, I'll answer this simple one. Yes and no, all right, because essentially Phillip Futures, we use MT5 platform, and MT5 platform, so far we have CFD indices, we have CFD stocks and shares, we have CFD Bitcoin, and of course we have the bullion, which is a spot gold and spot silver. All right, so this is essentially the main markets that I'm covering tonight. Okay, another one is which sector has the most upside within the next 6 months or a year? Okay, it has been what I've been telling everyone is that since last year, to look out for green technology. All right, green companies, even for Singapore also. As you know, the government initiatives have been really to support startups, technological companies, startup in Singapore. If you do your research, there are small startup technology company, and of course our government has been funding them. So likewise for US also, Joe Biden's his main objective is to push towards green technology, meaning using more of electronic cars, like those that is produced by Tesla. And also, of course, he is moving towards less, he's talking about carbon tax. So definitely these are more environmental friendly in a sense lah. So we should actually target towards technology companies, especially in the green sector, meaning if they are in the recycling business, if they are mainly recycling business, especially if they are able to recycle and reproduce. All right, so these are the sectors that please do your research. The specific stocks, Singapore stocks, do your research, and you can also email me, and I'll just share with you what I know lah. Okay, so all right, so let's move along. Okay, so this is my email address. You can contact me if you picked up some certain shares that you're looking at, and more so. But because this is a futures webinar, so I won't be really talking so much about shares. All right. Okay, so now when we, so I give you the long-term view already. So it is actually quite useless, right? If let's say, oh, I only know the long-term view, but I don't know when to enter into the market or so. So I think that let me throw in some technical analysis. I know a lot of customers, they don't like to look at this. Sometimes they think that it's very confusing. So this is the time where I want to so-called throw in just probably about 10 minutes to just show you simple TA to use to analyze your charts, all right? Because when we trade short term, what do you look at, right? We don't look at just purely the news. We need to look at the market movement. We need to look at the price movement. So for technical analysis, there are chart types, all right? You can choose whether you want to look at line base or bar, and or if not, candlestick. All right, line is always based on closing prices. Bar, you have the open high low prices. Candlesticks also will show you the open high low prices. But why I choose candlesticks is because they are able to give me more information. So let me just briefly go through what is candlestick if you are not sure. So sometimes you see some people charts, right? They are showing a white candle, okay, and a black candle. So white candle is bullish, All right, so of course for my chart, for easy illustration, my charts I put it green. Okay, but essentially white means bullish and then black means bearish. All right, so it's very simple. Green candle means that closing price is higher than the opening price, as you can see here. Okay, opening price is here lower and closing price higher, so it's a bullish candle. All right, so vice versa, this one also same thing. Closing price is lower than the opening price, so it's a bearish candle. Okay, now this one candle will represent 1 day, 1 hour, 1 minute, depend on your time frame. All right, now the candles can also appear in some formation, all right, which is like Doji, gravestone, dragonfly. Yeah, so what does it, what is all these things, right? Okay, essentially it is a doji candlestick chart pattern. Is a formation that occurs when the market open price and the close price is almost exactly the same. As you can see here, this one is the common doji. Now, of course, there are various variations as I mentioned just now. So we have the doji, we have the gravestone. So gravestone is over here. As you can see, it looks like a gravestone now. All right, and then we have like dragonfly over here. This one, yeah, looks like a dragonfly. And the long-legged doji. Long-legged meaning long here. Okay, is different from here. Common is usually like just a normal plus. All right. Now, of course, just mention to you that the vertical lines, all right, of this doji pattern is called the wick. The horizontal line, this one, is the body. Now, of course, the wick can vary in length. Okay, I show you here and here. Okay, and the body represents the difference between the opening and the closing price. All right, so for example, this kind of formation is when market opens and the bullish traders push the price up, and while the bearish traders reject the higher price and push it back down. Okay, so it's a push and pull tug of war in a sense, and this is also could be the bearish traders trying to push prices as low as possible, and then the bulls they fight back. Okay, so in other words, the market has explored upward, downward opinions, okay, options, but they rest without really committing to either directions. So they rest in the middle here, or sometimes they rest at the bottom here. Okay, so a word of caution is that don't read too much into this formation because this happens very frequently. But however, what I'm trying to say is the tip here is that if you see a series of it, all right, it means that market might be signaling weakness or a reversal might form. So you should actually watch out for this doji formation, but don't just rely on just one doji, but rather a series of it to find clues and hints of market weakness. Okay, so another type of candlesticks that I want to cover, which I think is very important for you to understand, is the engulfing pattern. Now, engulfing pattern in the nutshell is that it's a candlestick pattern where the second candle body covers the whole body of the previous candlestick. Okay, now it must be engulfed, meaning is totally overshadowing the previous one. So this is what we mean by engulfing pattern. Okay, now this powerful aspect is that it signifies a strong likelihood of a reversal in the market. So buyers or sellers have been aggressive enough to bring back the price to a level beyond the extreme level of the previous day. All right, now you need to remember, as I mentioned over here, the key criteria. Okay, not all engulfing patterns are considered significant. For the bullish one, it must appear after a significant drop in price. And of course, for the bearish one, that over here, okay, for it to consider valid, it must appear after a good increase in price. So watch out for the key criteria. The market must be clearly defined. All right. Now, beside this candlestick formation, dojis and all, we need to look at chart patterns such as trend lines, all right, continuation patterns and reversal patterns. Okay, so I touched a little bit here. I don't have all the time to touch on all these things. So let me just briefly explain to you. Trend lines, we are looking at uptrend, downtrend channels. Okay, we also look at support and resistance lines. These will be demonstrated later on my charts, and then I will remind you. And also, of course, Fibonacci retracement and projection. Okay, these are using all the support and resistance lines. So the next thing is, of course, continuation, consolidation patterns. We are looking at whether are the prices forming a triangle, rectangle, flex. Okay, the next thing to look at is also, of course, the reversal patterns. I will touch on this later because somehow one of the charts I found a double bottom. Okay, so these are like head and shoulders, double tops, double bottoms. You have all sorts of formation. So all these things you can actually find on internet if you want to go and research up more on it, all right? But these are the bare minimum that you should familiarize yourself before you can even look at trading short term. Okay, so based on these technical tools, let me just apply to the charts to find the entry point. Okay, now, as we have discussed, right, Nasdaq looks to set to continue the trend for the third quarter, second quarter, third quarter. So I will remain bullish bias. All right, so using a 4-month chart, I identified the support and resistance level, and also I identified the bullish engulfing pattern. Okay, so support and resistance. First support, this is your intraday support, meaning if you are a day trader, this will be your first support at 13583. But however, if you are longer term trader, meaning like probably 1 week, 2 weeks, then this is your second support level. So why these different support levels is due to your risk appetite. Of course, the shorter time frame, of course the prices, the support levels will be shorter. The longer time frame you have, then the risk involved is also longer. Okay. All right, so short-term support will be 13130. Okay, so of course, as I mentioned, right, I identify a bullish engulfing pattern, and this is what I mean when they totally cover up the previous red candle over here. Okay, now, word of caution, right, like I mentioned to you, when you identify a pattern, the whole idea is you need to train yourself to identify patterns. Do not jump in immediately. Okay, wait for 2 days of confirmation. So when I talk about confirmation, it means that it must continue, right? If it's a bullish engulfing, it must be continuing bullish. All right, as you can see, like at least 2 days. All right, it has been trading very nicely on the red, no, on the green moving average, the faster moving average. All right, so depending on what type of investor you are, like I mentioned to you, right? So intraday trader, you just trade within this first support, and longer term trader, you will trade according to the second support, which means you need to wait longer. Okay, so same thing for S&P. They will continue to be bullish, right, for the third quarter. All right, so same chart time frame, 4 months. I identify the support and resistance level. Okay, so yeah, S&P, they trade very nicely above my long-term moving average and trend line also. As you can see over here, the trend line I've drawn over here. And these are the moving average. This is the fast moving average, and this is the longer term moving average. So you can see that it has been really nicely trading above, which means that it is very bullish. Okay, now, first support, immediate support is 3971, which is over here. So for intraday trader, I don't think you will be able to trade. So you need to wait a little bit longer. Okay, now, so if the price remain bullish, right, any short-term retracement correction should be around the first and the second support over here. Okay. Now for gold, as I mentioned to you, it will continue its downtrend for the third quarter. So I will remain bearish bias. Okay, now for the past 4 months trend, I have identified the support and resistance level. Okay, so and if you follow me, okay, I've identified a pattern here also. Okay, so this is your first resistance, intraday resistance, your second resistance, and also this is a double bottom chart pattern. Okay, so now double bottom means that is a reversal, meaning on normal circumstances, it is like a W, right? So it will continue to go up here. All right, as you can see, very, very nice double bottom. It's a very classic double bottom. So it should continue to go up. However, we need to take note, you don't trade just according to technicals. You really, really need to look at fundamentals also when you trade, especially gold, because gold, they swerve in between safe haven or not. So as I mentioned to you, currently the previous examples, how come gold is not going up due to the stimulus, the cheap money, is because of the positive economic data and also, of course, the positive vaccine rollout. It gets quicker and faster. So that's why people are more optimistic. They don't need safe haven now. More money is rolling into stocks. And of course, your crypto, your Bitcoin also. So that's why you see that even though it reaches a very nice double bottom, it will not continue to go up. Okay, so for me, I will strongly believe that it will continue to go down. Okay, all right. Okay, so why I include all this is to just to give you an example that you need to be able to identify chart patterns, especially those basic chart patterns to really help you to find your entry points. And especially when I mentioned to you, watch out for a lot of dojis. This signals that the market is indecisive or weakness is coming in. Okay. All right, now let's move on. Let me just take a break here and let's look at okay, so one of the question over here is that may I know the reason again for downtrend for gold, right? Okay, why downtrend? As I mentioned, right, now Joe Biden, he is introducing 1.9 trillion into the market, so cheap money, right? So in normal circumstances, if you look at gold 10-year formation or 20 years formation, when they bring in QE, quantitative easing, that they first started 10 years ago, what happened is that gold shot up, right, because of cheap money. But however, this time round, we are looking at a situation, the key drivers of the economy is that because of COVID-19 is a pandemic, it's different from back then the quantitative easing issue when it was triggered firstly by the Lehman Brothers. So this is COVID-19 is of course is a pandemic, is a disease by itself. So definitely the focus is different. So when he introduced 1.9 trillion of stimulus into the market, what happened is that this is trying to propel the like small companies, those that are struggling and they closed down during COVID-19. He's trying to so-called bring put in all these, help out these companies to bring them up again. So in that process, he is actually bringing up the whole economic of US. When that happens, right, you will see that gold actually stops being a safe haven. Why? Because more money means that people will start to invest in stocks. So clearly we see that, like, if you look at just now I mentioned to you the economic data, the non-farm payroll, the ISM, they have been reporting very, very good data. And of course, the next quarter, we are expecting that it will continue to report very good data. So with all these things in mind, you will know that people are more prone to be investing, be it your stocks, your cryptos. So less people will be putting more money into gold per se. Okay, this is trading per se. Like I mentioned to you, if it's cheaper, physical gold is very straightforward. Cheap, go in and buy. All right, because physical gold is really not for trading. You just keep it. When it's cheap, really cheap, just go and buy. That's it. But when it comes to trading, it's different thing. Now, so that's why it starts to come down, because people are not looking at gold trading anymore, in the sense that they are not looking at safe haven. So that's why you see that gold for the next probably third quarter and even 1 year, it will continue to go down. And everyone focus is looking at stocks, technology, Nasdaq. So that's why this is where their focus are. Okay, and yeah, so yes, dollar is weakening, of course, due to the stimulus checks also. All right, so there was a period of time the bond yields actually skyrocketed, and it actually caused the gold over here to come up a little bit. However, this kind is really just very, very short term lah. And of course, this is also contributed by some of the bearish investors taking a breather. Okay, so that's the reason why it will continue downtrend for gold. And of course, your Nasdaq and your S&P and your Dow Jones, they will continue to go up. So like I mentioned to you, gold will be bearish for 2021, the third quarter. That I can be quite sure. But like I said, I wouldn't know by the end of the year what will happen. Maybe something new might happen. I do not know. So that's the reason why webinars like this, you really, really need to take note of the time frame that we tell you. So it doesn't mean that this speaker say that, oh, gold is going to be bearish. So you think that, oh, for the next 1 year? No, we are giving you this time frame is going to be bearish for the third quarter. So probably for the until maybe August, September or so. All right. And of course, in between, we need to see if there's any like increase in geopolitical tensions. When there is, then you'll see that probably gold will start to come up because of the safe haven, where investors are seeking safe haven. Okay. And what else? Let me see. Oh, okay. This is quite interesting. Why people choose crypto rather than gold? I don't really have an opinion on this, but probably when I look at the chart for crypto, I can understand why people choose to trade crypto, because it's very volatile. It's moving very, very fast. So I guess probably it's the thrill of it. And but I'm not so big on crypto, because essentially if you're looking at something very solid, something very foundational, I specialize more in gold, because if you really go and study the history of gold movement, it moved very, very well, in the sense that it is quite, if it comes down quite nicely. It goes up quite nicely by step. If you there's this called Elliott wave theory. It works very well on gold, so it's something that you can go and research on also. But if you talk to me about crypto, no, I have no opinions on it, although even though we offer it, for some of you that is open to very, very big volatility kind of trading markets, because we all know that markets, they don't move all the time. Sometimes they move a little bit, sometimes they move a lot. But for crypto, they are moving like all the time. So I guess it's also because of the younger crowd, the younger investors coming in, because as you know, gold futures, gold spot gold, they don't really appeal that much to the so-called like millennials investors, because of how probably slower in that sense lah, quote unquote, the movement are as compared to crypto. So that's the reason why. Okay. Okay, let me see what else I have. Okay, there's one over here. I didn't get your name, but you say that quarterly, yearly trend indicate bullish. Oh, you mean here? Now, when you look at here, yeah, probably I need to explain a little bit. Yearly trend, it means the past year, okay? And monthly trend is bearish. Yeah, so we are still looking at bearish. Okay, I have another question that says here that there's an expectation of devaluation sentiments. Does that traditional drive towards safe haven? Yes, yes, traditional. Yes, you use the right word. However, given the situation and the circumstances also, we need to take a look at the what is happening currently. So traditionally, definitely, it will be driven to safe haven, towards safe haven, yes, but it's not the case right now. So there's expectation, yes, of devaluation, but you need to also take note of the COVID-19 and also what is going on and the government's direction. I think that's more important than anything else. Okay, so I'll just continue to move on. So for tonight, right, all these charting software and tools are taken from MetaTrader 5. Now, of course, the forefront of Phillip Futures platform is MetaTrader 5. So this is a multi-asset platform. As I mentioned to you, it has Forex, CFD, Bullion, and even a CFD cryptos. So of course, the beauty of this platform is the ease of use. And of course, this is available on mobile phone trading. Now, why is it so popular is the ability to initiate two open positions without knocking off each other. So for example, you can initiate a buy and a sell of gold. Now, many traders, right, they use this function for hedging their position. So for example, if you look at this chart, right, if I have a long-term view, I will buy gold, all right, because it's going up here long-term. Okay, but short-term wise, I want to take advantage of the opportunity of the so-called retracement, the short retracement. So I'll initiate a sell gold position to profit off the short-term positions. Okay, so another attractive feature for this MT5 is, of course, as I mentioned to you, is zero commission. You don't pay any commission at all. So while this is like really, really powerful, right? Many people don't use many of the functions available. And then they will still rely on their own way of analyze the markets, and it's usually subjected to their own biasness, or they hear their friends or experience. Now this is very dangerous, especially if you do not have some basic form of foundation in terms of analyzing the market. So what we come up with is that we actually invested in this autochartist.com. So this is a plugin where once you apply the MT5 program and you plug in into this MT5, it auto charts out the patterns and calculate your risk involved. So let me just give you an example, right? I added auto chartist to my gold charts. So it plots out two patterns, descending triangle and support in 1 hour time frame. Okay, and of course you can customize what kind of patterns in what state of formation you want to see. All right, so this is the customized outlook. All right, now, of course, coming to the last leg of the session tonight, I'll just brief you through the current promotions that we are running and the process of getting your trading account set up lah. So the ongoing promotion is refer a friend program. Introduce your friends, and after they do the first trade within the first month of account opening, you'll be entitled to SGD 138, or if you use MT5, it will be USD 104 referral fee. Okay, there's no limit to how many people you refer. All right, so for more information, you just email me lah. All right, now next thing is that the requirements to open a live trading account is that you scan the QR code on the right side of the screen. Okay, now then you fill up the online form via My Info, and that's it. Okay, it takes about maybe less than 10 minutes to fill up everything. Okay, and then you have to upload your bank statement. So once everything is in, your trading account is ready lah. Then you can proceed to deposit the required the margins, the deposit to trade whatever products that you want. All right. Okay, over here, let me just pause for a while. I have some questions about the account opening procedures. Yeah, so what you need to do, right, you just scan the QR code on your screen here, and then it will actually prompt you to use My Info. Yeah, then you just fill it up using the SingPass. Okay. All right, so let me just pause for a little while. Continue to send in some questions if you have. Okay, so now if you are deciding whether to open live account with us or not, I would really just take this moment to advise that you will benefit more when you trade with Phillip lah. Okay, as mentioned earlier, you know, I told you the trend. I also teach you a little bit about how to enter the market. So these are just like giving you a 50% chance of success. But the whole idea is that you need to structure your trading portfolio, which you might not be really good at, or you need some guidance, all right, in terms of like the size, the quantity, and also you need to know your risk appetite. Some people, they don't really understand how much risk they can take. So that's why I say you need to really engage a personal broker that will look at your whole portfolio and advise lah. Of course, at Phillip Futures, our brokers are very, very equipped. And of course, personally, I've trained some of them, so I know where the standard of market knowledge are lah, and their ability is. So of course, I believe we can assist you in your trading far better than any other brokers in the market right now. So, all right, this is about 1 minute before 8 p.m. So I have come to the end of my training session. Okay, I trust that it has been fruitful. So, and I hope that I've gotten you to think seriously about trading on your own and make home trading your lifestyle. Now, a link to this recording of the webinar will be made available in our follow-up email tomorrow. If you have any inquiry on the webinar or you want to get started, just reply to our email and we will get in touch with you. Okay, so this is Shermaine, your trainer for tonight, signing off. Have a good evening.